Legendary investor Stanley Druckenmiller is making headlines again with a major change to his investment portfolio. This time his message is unmistakable. He's shedding his older, more traditional investments and pouring money into technology with a laser focus on the AI revolution. His firm, Duquesne Family Office, has filed reports showing a clear strategy. He's cutting ties with companies in finance, energy, and industry such as Kinder Morgan, Barclays, and Wabtec. Instead, he's fully embracing businesses that are leading the charge in digital innovation. For Druckenmiller, this isn't just a minor adjustment. It's a profound declaration of his belief in where future growth will come from. He has consistently warned that investors can't afford to hold on to yesterday's successes when the global economy is shifting toward new ideas. He once famously said, "The best opportunities appear when the world is changing rapidly, and most people are still stuck in the past." That insight is more relevant than ever today. With interest rates finally settling, inflation cooling down, and markets searching for the next major growth engine, Druckenmiller is aggressively investing in the sectors he thinks will dominate the next 10 years. These recent trades prove his conviction. He's made 2 brand new investments in fast-growing AI and tech companies, and significantly increased his position in a company he already owned. He's not chasing fads. He's investing in the core trends in data, software, and advanced hardware that power the AI-driven economy. This move also highlights his famous ability to adapt. Druckenmiller understands that broad economic factors like Federal Reserve policies or slower global growth can cause market turmoil. However, he also knows that true long-term wealth is built by backing unstoppable trends. In our discussion, we will explore the 3 tech and AI companies Druckenmiller has invested in, why they are so special, and what his shift means for smart investors looking to stay ahead. This isn't just a portfolio change, it's a blueprint for where the world's most sophisticated investors are heading. First up is AppLovin Corporation, with the ticker symbol APP, a company that has quickly become a hot topic in the advertising technology world. Once primarily a mobile game publisher, AppLovin has completely transformed itself, focusing on the highly profitable digital advertising space. This strategic change is paying off in a huge way. The company's main advertising platform, powered by its Axon engine, is already showing incredible growth, and its full worldwide launch isn't even scheduled until the first half of 2026. This suggests that what we're seeing now might just be the very beginning of a much bigger story. Interestingly, despite its reputation in mobile gaming, AppLovin actually gets the majority of its revenue from its software business, which helps other app developers grow and monetize their apps. AppLovin's business model is designed to help app developers and brands reach huge audiences through its massive ad network, which already has a commanding lead in mobile in-app gaming ads. With over 1.4 billion daily active users, its reach is unparalleled. The upcoming launch of its self-service Axon Ads Manager will give advertisers even more opportunities to precisely target their audiences. Beyond gaming, the company is quickly moving into e-commerce, connected TV, and even forming partnerships with device makers and mobile carriers. These moves help to spread out its revenue streams and make the company less dependent on a single market. The company's financial results support this impressive momentum. In its most recent quarter, AppLovin reported advertising revenue growth of more than 70% year-over-year, while its profit margins expanded to levels that few other companies in the ad tech industry can match. With management forecasting continued double-digit growth, the company is clearly confident in its future. At the same time, it is taking advantage of a larger industry trend. As regulators put pressure on major players like Meta and Alphabet, the demand for independent ad tech companies is soaring, making AppLovin one of the biggest winners. Of course, competition from rivals like Unity is getting tougher, but AppLovin's performance has been incredibly impressive so far. Druckenmiller's decision to increase his investment by over 120% shows his belief that this is more than a short-term trade. It's a long-term growth story with significant potential. For investors who pay attention to where the big money is going, AppLovin is a name to watch as a top player in the evolving world of advertising and the AI-driven economy. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or investing in gold, I've got a free guide on gold IRAs linked below. Stick around, I'll go over why it's useful at the end of this video. Next on our list is Broadcom Inc. with the ticker symbol AVGO. This is a brand new addition to Druckenmiller's portfolio and one of the most powerful companies fueling the AI infrastructure boom. Broadcom isn't just another chip maker, it's becoming the crucial link in the modern data economy. As tech giants like Amazon, Microsoft, Alphabet, and Meta continue to spend billions on artificial intelligence, Broadcom is quietly becoming a key partner by providing the custom chips, networking solutions, and Ethernet gear that make powerful AI systems possible. The company has already proven how vital it is to this ecosystem. In its most recent financial report, Broadcom's AI revenue grew by nearly 42% year over year, now making up close to a third of its total sales. Even more remarkable was the 170% growth in its AI networking business, which highlights just how essential its Ethernet switches, routers, and connectivity products have become. This isn't a one-time surge, it's a long-term structural growth trend. With the recent launch of the Tomahawk Ultra and Jericho 4, Broadcom has introduced its next generation of networking equipment specifically designed for massive AI data centers. This is a market that is expected to grow exponentially as cloud companies expand their infrastructure for large language models and advanced machine learning applications. The broader market conditions couldn't be more favorable. Every major cloud provider has announced plans for record capital spending in 2025 and 2026, with a large portion of that money going toward servers, GPUs, and connectivity. Broadcom's strategic position means it gets a piece of every dollar spent on building AI capacity, linking its growth directly to this once-in-a-generation technological build-out. In addition to its semiconductor business, the company's acquisition of VMware brings in steady software revenue and better profit margins, giving the company both stability and growth potential. While its debt levels are something to watch, Broadcom's size, diverse business model, and leadership in networking make it a true backbone of the AI era. Druckenmiller's decision to buy a new position in the company shows his belief that this isn't just a short-term trend, but a long-term winner in the digital economy. For investors following the smart money, Broadcom represents a bold bet on the essential infrastructure that will power artificial intelligence for decades to come. Finally, we have Microsoft Corporation, ticker symbol MSFT. This is another new addition to Druckenmiller's portfolio and a company that everyone knows. Microsoft has positioned itself right at the heart of the AI transformation, and its cloud computing service, Azure, is a testament to that. Azure now generates over $75 billion in annual revenue and continues to grow faster than most of its rivals. The secret to its success is the seamless integration of artificial intelligence across all of its business software. From tools powered by OpenAI to Copilot embedded directly into Office, Outlook, Excel, and even GitHub, every single Copilot license sold creates more demand for computing power on Azure. This creates a powerful, self-sustaining growth cycle that very few competitors can hope to match. Interesting fact about Microsoft. Its first version of Windows 1.0, was released on November 20th, 1985, a full decade after the company was founded. What makes Microsoft's story even more compelling is its incredibly strong business ecosystem. From Windows to Office 365, Teams, and Dynamics, Microsoft's products are deeply integrated into the daily operations of governments, Fortune 500 companies, and educational systems around the world. This deep integration creates switching costs that are nearly impossible for new competitors to overcome. Even Elon Musk's recently announced Macrohard project, a planned AI-native software company, barely made a ripple in Microsoft's stock price. Investors understand that while new ideas may emerge, no current rival has the infrastructure, partnerships, and network effects that Microsoft has so carefully built over many decades. The numbers further prove the strength of its business. In its most recent quarter, Microsoft reported $76.4 billion in revenue, an 18% increase year over year. Azure grew by 39%, and intelligent cloud revenue surged to nearly $30 billion. Operating income jumped 23%, while net income rose 24%, showing the kind of impressive scalability that justifies the high value investors are willing to pay for the stock. On top of all this, Microsoft has exclusive partnerships with NVIDIA and OpenAI, guaranteeing continued access to the GPUs and AI models that are driving the AI race. Looking ahead, the future is just as promising. Interest rate cuts could encourage companies to invest more in digital transformation, while the upcoming end of life for Windows 10 may trigger a widespread upgrade of personal computers. Combined with the accelerating demand for AI-driven productivity tools, Microsoft isn't just keeping up, it's setting the pace. Druckenmiller's investment in Microsoft highlights how essential this company is for anyone looking to invest in the businesses that will define the next era of technology and enterprise. The stock market's been jittery lately, and when uncertainty rises, history shows us where smart money tends to go: gold. Central banks' demand for it last year alone reached a record high, and spot gold just surged past $3,300 an ounce. And recently, it has surpassed the Mag 7 as the most crowded trade on Wall Street. If you're thinking about ways to take advantage of gold in your investments, I found a company that gives Americans a free guide on how to add real physical gold to their retirement portfolio in a way that's simple and secure. No sales pitch, no pressure, just honest, helpful information you can trust. Click the link in the description to get your copy now, because when the biggest financial institutions in the world are quietly stockpiling gold, it's not just a trend, it's a signal.